Good evening. This is the Elliott Wave update for the NASDAQ 100 for Tuesday, May 31st, 2022. There is not much to be adding over what I presented during last night's podcast and previously concerning the NASDAQ. We basically had an inside day today, although the market and Globex did manage to get up to 12,883. And before basically spending the balance of the session heading lower. And the market did finish lower, but right now someone has walked in and they've decided they're going to buy it back up a little bit. But nothing major. In fact, I would consider it a little bit more of an inside day since the high was reached during Globex. So here on the daily chart, which is where I'm going to start, everything remains the same. The the daily 4 moved up and just about crossed that 20. The 8 continues to point higher. Everything else is still in alignment, basically for the markets to continue lower. The short-term picture that I presented last night remains in place, where we still have not gotten any solid evidence that the intent is for the market to continue higher, that we have moved above, again, that I'm not even use this high, 12,943, which is where it would negate this being an intermediate fourth wave. If it is a fourth wave, an intermediate fourth wave, I am looking for the market to continue lower, but it got down below 12,500 this morning, but then held that 20, held the 4, and then just worked its way back up. And it's not moved outside of that early range, which keeps everything else in place for right now. So for tomorrow, again, we're looking for the market to give us an idea or give us the answer to what its intent is for the balance of this week and just for building on this rally or completing this rally and now heading lower. Are we going to head lower in a smaller pullback and then do another leg up, which would then make this an A, and then we get a B and then a C? Or are we going to move up with the possibility that this actually did provide us with a 1, 2, 3, but we didn't get that until after, so I can't consider this a completed 5-wave structure. Let me go down to the hourly just to make sure that I'm not talking crazy. So that would have been, no, it did not. So we have the 3 possibly up to here. And then we had what pretty much can be considered a small a, a small b, but nothing seems to fit other than it was more than likely 5 down. Then we get a nice rally, but then it fails. So that's kind of the picture for today. It's just a lot of moves with failures. So the decision's still out as to what the market's intent here is. Here again, on the hourly chart, we see that the market did initially come down, break below the 50, but it also broke below the 20. And then it flipped the 4 and the 8, which continued to kind of huddle between the 50 and the 20. The market ended up spending quite a bit of time between the 20 and the 50, one providing support, the other providing resistance with breaks above and then retracements back into. So nothing has changed. Although we did see longer and stronger periods of sellers. So they're back from the holiday, I guess, but not enough to really put in a directive move. So in other words, it's like, what's really kind of going on? What did support the markets today? Amazon. Amazon tacked on $100, but don't forget that next Monday, Amazon splits. So now we're doing the mad dash to pick up the stock and to buy in to participate in the split, which is a 20-for-1 split. So if people, you've been wanting to get Amazon, they'll come in and they'll buy maybe 10 shares. Maybe they'll buy 20 shares. They'll buy a smaller amount in hopes of it becoming a much larger piece of Amazon. So that's now in play. And Apple, believe it or not, flirted with 150 often today during the session. So that was something that we discussed yesterday, that the market had poked its nose above it. It actually traded above it after expiration had finished. And I just thought that might have been a lot of adjusting because of the expiration. It traded up and over 150, could not get past about midway between 50 and 51. So same story. It slides lower into the close. They start to step up and look to buy it back again. So nothing has changed. We're still sitting in the middle. And the best that I could say is that for tomorrow, I would initially continue to look for the possibility that we come down. We'll probably rally back up. To give us an indication that the rally is going to continue, if I'm looking out here on the daily chart, we need to see it above 12,900 and basically above this resistance at 12,937. Then we need to see it above the 50, which is at 13,104. Failure to do that really leaves this in a precarious place of following through more to the downside, and for that downside to get pretty severe. Now, today we did have a few numbers early that kind of came in. We had Chicago PMI, consumer confidence. Consumer confidence was a little bit under what they were expecting. So tomorrow we have ISM manufacturing also at 10 a.m. That's be the most important one that we have for tomorrow. Thursday, we have the start of the OPEC meeting and jobless claims, all pre-market. And then again on Friday, we have the employment situation for May, which will come out pre-market. So we have some closely watched for any hints on the talk that the Fed is going to turn more dovish, and they're not going to raise at the extreme pace that they've already set, which is not that extreme. And any case, same patterns for tomorrow. We know what to do. Trading wasn't spectacular, but there were enough moves to make some money. So profit was there and it was pretty clear. And so we were able to get in there and catch some of the moves. Continue to use the moving averages. Again, the rally comes down about 50%. If that holds and we can rally back up, do look for it to go crossing 12,770 and start heading up towards that 12,900 area. That's going to give us a lot more, or give me a lot more confidence that the market's intent is to continue higher and eventually make clear the wave count. Right now, this can be switched around as I described yesterday, that could be intermediate A, intermediate B, intermediate C. That works. And then we're in a B wave. So this would, underneath all of this, would be primary wave A. We'd be in primary wave B. That's one interpretation. So the other interpretation is that the 3 is actually down to here, and this is still a 4, but it's getting a little bit too high. But a minor 4 still hasn't broken any rules that would disqualify it. So we have a few switches that we can make, but the market is not letting me know that that's what I need to do. So same story for tomorrow. And follow the moving averages, and we'll look for some good trades again tomorrow. Our next update will be on Wednesday, June the 1st.